What's up traders, Tom here with another video. Today we'll be discussing something that I actually find pretty disturbing. 1000+% increases in companies that have filed for bankruptcy. What does this mean for the current levels of the S&P 500 and Nasdaq moving forward? Stay tuned. So as we like to do on this channel, let's cut out the noise and discuss some of the most important news and information available to us as investors and traders. I'd also like to remind everybody that if you haven't already, make sure to subscribe, hit the bell, and give this video a thumbs up as it helps us a lot, and we're trying to create the best trading and investing community possible on YouTube. And you are all making that happen, and I'm really happy with how this channel is going. So let's discuss actually what the community has sent me. So a gentleman has sent me this particular chart, and he wanted me to mention that there's a big difference between the current jobs figures that everyone's talking about right now and the permanent jobs losses. And that's so true. So here we have the permanent jobs losers when compared to now and the GFC. Now there's a thing called furlough, and that doesn't mean that the job has gone yet. It just kind of means it's in limbo as far as I understand it in the US. It's a different term here in Australia. It turns out that we are at around 2.295 here when compared to what the deepest point of the GFC was, which is 6,818 here in the numbers. So we are not quite anywhere close to that, but that doesn't mean that these current incredible unemployment numbers won't get here. So let's talk about what actually happened last week. So some people are saying that that jobs report was actually misleading and the number could be 20% unemployment. So if we're breaking that down, let's just say that's correct or something around there where they've missed people. In plain English, it says here, this means that May unemployment rate is actually 16.3%, not 13.3%, because 4.7 million workers were misclassified as employed, but they were really unemployed. So if that's true, that's pretty important information. But the way I want to look at it is this, and I will circle this for everybody right now. A recent analysis from the Becker-Friedman Institute at the University of Chicago estimated that 42% of people furloughed will never get their jobs back, and only 30% of those laid off will land new jobs later this year. Some companies have already acknowledged they will lay off workers once they meet their obligations. It's very important that we understand the difference between what we're currently seeing in the stat and what the real stat is going to be. And the stock market is probably just cutting through it and saying, okay, well, it's not that bad yet. Let's see what the numbers are in 6 months, in 3 months, in 2 months' time. And that's why sometimes what you hear in the media is so different from the reality. So thanks very much for sending that in, and I really appreciate it. And please join the Discord group as well and send me this kind of information so I can supply it to the community, because I think it's really important to do so. The next bit of information is about the global economic prospects from the World Bank Group flagship report. So these kind of reports are very important, and I'll click on how deep will this current crisis recession be. So if you read this report and we cut through it, basically the World Bank expects developed economies will contract by 7%, led by a 9.1% decline in growth for Europe this year. Breaking down those numbers, the US is expected to contract by 6.1%, and China could possibly post a 1% expansion. But remember, that's still well under what they're used to. So these numbers are pretty scary, and again, this is painting a grave near-term outlook and does not really necessarily support the current V-shaped recovery we are seeing this year. We're about to talk about some crazy companies and how there is so much FOMO anticipation of never-ending growth in the markets. But if my experience for over 10 years easily in the stock market has shown me anything, being patient and having conviction is the strongest thing. And while there are still value stocks, even some we covered the other day, it is not probably over yet. So what's our number one indicator right now? Well, of course, it's the printing press pal, Jerome himself. And we need to be aware when he is talking and when any press conference is going on with him in it. So we have the FOMC coming out and doing a press conference talking about the interest rate, talking about all those types of things. The stock market will be waiting for that, and we are seeing key levels being reached just ahead of this information. No coincidence, it happens time and time again. So make sure to subscribe because we'll cover this concept more and more as we make more videos on this channel. So the printing press is coming out. So he's basically going to be telling us what the policies are going to be. Time will tell what those policies are, but you need to go to websites like forexfactory.com, DailyFX, whatever else you want to use, and you need to have an economic calendar so you're aware as an investor or a trader of that important conference news. I want to talk about value in terms of when you're investing in a market like this. And I think this little highlight down here helps everybody to put some things in perspective. So in a research note published on June the 1st, Subramanian, I think that's what it is, said 14 of the last 14 recessions, value has outperformed growth for at least 3 months when the economy showed signs of improving. So we are seeing value and a rotation into value, but still so many value stocks are quite low. So if you're a believer that we are coming out and we are in an economic uptick and you're looking at stocks, there could be defensive value, I'll say that again, that is presenting decent buy opportunities to still get into. And we'll hopefully cover those on this channel. So, quick article from Reuters, dollar falls as nerves set before Fed policy decision. It just shows that everybody is waiting on the Fed. Brazil has 32,000 new cases in a day. The main importance of this news is obviously it's terrible, but at the same time, it shows, like we were talking about iron ore the other day, because Brazil has a big problem, Vale has had to stop output production. That's iron ore. What's happened? Iron ore spiked. There's still demand around the world, and it's helped iron ore miners. So while this is terrible, you need to be aware of all the information and think a few steps ahead, which we try to do on this channel. So let's talk about some technical analysis of the indices and some stocks that are pretty terrifying. So here we have Hertz. We've mentioned this before. It's a 2-hour chart. I've got the volume up here just so you can see how weak the volume was really on some of these big moves. And I just wanted to talk about the fact that we went from under 50 cents on the 26th of May for a bankrupt company that has filed to the 8th of June, $7. Unbelievable returns, well over 1,000% returns. So we are seeing crazy returns on stocks due to the fear of missing out and a huge amount of gambling going on in the stock market. People are treating this like sports bet. I'm telling you, it's very similar to sports betting, what we're seeing. Bankrupt companies, thousands of percent up, insane. We have another one here, Chesapeake Energy Corp. Went from around $12, same date that it started pulling off around the 4th of June, went all the way up to 80, and then of course has crashed back down. So we have a rife amount of speculation. Where is this speculation coming from? Most likely our retail traders. So unfortunately, people like you and I. And as you see here, we search Robinhood, we search Hertz, and it is got a 0% buy rating, but it is owned and purchased by so many retail traders. So if you're a retail trader, make sure to subscribe to this channel because we'll try to help you from cutting out the noise and making more informed decisions in the future. There's quite a few bad stocks in this 100 list in terms of things that I wouldn't touch it with a barge pole. Let's face it, investors that begin make all the same mistakes as everybody always does. How many investors out there in the comments section have made 100 or 200% on stocks later to give it up because they don't diversify their portfolio and they put everything and all their eggs into a basket thinking that they are going to be able to pick the next 100, 200, 500% company? Unfortunately, it happens all too often, and it's something where you always need to consider. I like making 20, 30, 40%, 50% from quality so that I can compound my money. Whereas when you're doing it in speculative stuff, unfortunately, it can all unravel in just a few nights. All right, on to the indices. Let's talk about the Nasdaq. The Nasdaq has hit the level 10,000, reached, ding, ding, ding. I cannot believe we reached it this fast, but whatever. We have done V-shape and more, and this is what the market likes to do. We did a video talking about V-shaped reversals, and we spoke about how the market will always like to go back up to that resistance, maybe slightly spike ahead of it, and then we will see a dip. Now, the Nasdaq has not really had significant selling on it since the rally. In fact, I think it's almost gone more bullish than bearish during this current crisis. So I've put a Fibonacci up here, and generally speaking, you would expect the Fibonacci to come down to around a 38.2 Fib, which would be where we had previous resistances and previous kind of supports. So if you're looking at the Nasdaq, that could be an opportunity where, would I be buying it right now ahead of the Fed report? Probably not. Could the Fed come out, say nothing, say we're happy with how everything's going, we're not going to do any extra? If they do that, the market may not like that. That could be the catalyst for the sale. So we always need to think there's a catalyst coming. Does the risk reward make sense for us right now? And the Nasdaq risk reward is certainly getting pretty crazy. So 10,000 achieved, key psychological level, expect it to struggle around that point and people to be taking profits. The S&P 500, similar case scenario. I would actually think that it tries to go all the way up to 3,400 and then shows the weakness, but you never know. Again, it is the Fed report. If it does come down, expect some kind of support around the 3,000, the 200 SMAs sitting around there, the moving average that is, and we've got the previous resistances will become support. So there are potential dips coming in the market around these levels. It has been an aggressive rally, a super aggressive rally, and not many people are picking it. But remember, I told you Wall Street may not have enough volume in this market and they want to get more in for their longer term picks. And that unemployment figure could be actually worse than Wall Street expects, as we see people actually losing their jobs rather than just being in furlough. So the numbers will not lie at the end of the day. We are going into earnings season over the next coming months. We are going to see real figures start dripping out. And as I said, the risk reward to the market right now is very scary. So if you're in long and you're holding quality, nothing to worry about. You just buy more, hey? But if you're looking at getting into the market right now, think about the stocks that you're picking. Are they defensive? Are they value stocks? Are they already still relatively beaten down? Could you wear the risk of where they went only in March? How many people actually considering they could even go back down there? If you buy a stock and it returns to where it was in March and you can't hold that mentally or psychologically, well, you shouldn't be investing in that, because you could lose all of your money and then it could go on to be more successful in the future and you'll just be sitting there going, I lost it all for what? So always think about that type of stuff. Make sure you subscribe and hit the alert button. And of course, give us a like and comment down below if that information resonated with you. If you've made a lot of money in the past off a few shares and then made the general mistake that everybody does, which is to give it all away by not diversifying, let the other traders know and share your stories, because it helps everybody to learn and get better. Happy trading, everybody, and we'll see you in the next video. Bye.